Good evening. This is the post-market recap by AGI Era. Today is Monday, December 22nd, 2025, and it is shortly after 4:30 p.m. Eastern Time. The closing bell has rung, and we have a lot to unpack from today's session. The scoreboard and technicals. The U.S. session has officially wrapped, and the price action suggests a quiet but firm day for the bulls, though not without some underlying divergences. The S&P 500 finished the day up 0.64 cent, settling at 678.49. Technically, the index pushed higher but failed to test the next psychological level of 6,900, showing some hesitation into the close. We will be watching to see if it can consolidate these gains and build a base for a year-end push. The Nasdaq 100 followed suit, closing 0.46 per higher at 25,461. The Dow Jones Industrial Average finished up by 227 points, or 0.47%. Crucially, trading volume today was lighter than average, which is typical for a pre-holiday session. This implies that while the move higher is welcome, it lacks the high-conviction, institutional footprint we'd prefer to see. This is more of a market drift than an aggressive accumulation day. Market breadth and sentiment. Under the surface, the fear gauge, or VIX, did not have reliable data available at the time of this recording. However, the orderly nature of today's advance suggests there was no significant spike in broad market anxiety. We are seeing a clear, albeit modest, divergence in sector performance. Money flowed noticeably into the technology sector, XLK, which gained 0.37%, while the defensive utilities sector, XLU, lagged significantly, falling 0.37%. This rotation, with a spread of nearly 75 basis points, indicates that Wall Street is favoring growth and risk-taking over safety, a classic risk-on signal for the session. The macro engine room. While data on the 10-year Treasury yield was unavailable at the close, the primary driver of today's macro moves can be seen clearly in the currency and commodity markets. The U.S. dollar index is trading lower at 97.95. This move is significant because a weaker dollar acts as a tailwind for multinational corporate earnings and more directly for commodities priced in dollars. We see the direct consequence of this in the energy market. Crude oil is trading sharply higher, around $57.97 a barrel, a gain of over 2.5%. This rally is responding directly to the softer dollar, which makes oil cheaper for international buyers, thereby stimulating demand. This is putting pressure on transportation and industrial sectors that count fuel as a major input cost. The AI and Tech Monitor. Turning to the leaders of this market, artificial intelligence and big tech showed a very mixed session, telling a story of rotation, not just blind buying. NVIDIA was a standout winner, finishing the day up 1.49% and 69s. However, Apple was a notable loser, closing down 1.4% to 2,582. Microsoft also closed slightly lower. The weakness in a giant like Apple, while the core AI leader NVIDIA rallies, is notable. It suggests investors are becoming more selective. The capital flowing into the tech space today was not lifting all boats. It was specifically targeting the high-growth AI narrative, while potentially shedding exposure to consumer-facing hardware ahead of the final holiday shopping numbers. After hours and look ahead. Looking at the after-hours tape right now, shares of Luminar Technologies are moving significantly on high volume. The stock is one of the most active names in the extended session, a name traders will be watching closely for any company-specific catalyst. As we pivot to tomorrow, the economic calendar is light, which is typical for this week. Therefore, the market will likely continue to be driven by these internal rotations and macro moves in the dollar and oil markets. Investors should specifically watch if the S&P 500 can build enough momentum to meaningfully challenge the 6,900 resistance level on this low holiday volume. That is your comprehensive closing update. We will see you tomorrow morning for the overnight brief. Disclaimer: this podcast is not financial advice. Data may be delayed. Always conduct your own due diligence.